Hi everybody, it's Christian from Serene Education with the 4 majors list update for the 10th of July 2013. Thank you very much for joining us this morning. We're going to be over the 4 majors, starting with the Euro against US dollar using our FX Ultimate 8 template. And let's have a look and see what happened yesterday. We had a lot of negativity yesterday on the candle. This is after price actually was heading into this price support and resistance level here. You can see that recently, well, the all-time low here back in March of this year, we went into this area around here at 2700 mark, 12742, and price bounced. Then we had the same reattempt at the bottom here, but you can see it actually flattened out prior to that, and then we saw a move. So the past couple of days, particularly last week, Thursday and Friday, heading into this price support and resistance level here. Yesterday's bearish engulfing candle confirming that we should still be looking lower, and it's heading into the ultimate area here. The weekly, which is the 23.6 mark. We're now there as we speak. So if you are looking for further shorting opportunities, rather trade very aggressively into this area. Otherwise, one thing to do now is to rather wait for the candle to close below this level. You can quite clearly see that we are already there. Last time we were at this level, price actually bounced. So if you look at the RMO below, MACD below, however, the MACD has, as it's fallen, it's got lower. Okay, you can see it's making its way back towards the zero line. Look at the chart. More buying sentiment intraday. Even though the RMO, the moving average is still today, so we should be looking for selling. We have to be well aware of these major support and resistance levels. And this 12.7420 mark is just one of those. So look for a confirmed break below that. Go to the 4-hour time frame. You can see, if you look at the 4 hours, we just, there we go. Swing lows depicts downside movement. Swing low, swing low, swing low. Last bearish engulfing candle. But you can quite clearly see that major weekly support and resistance level is not too far off from where price is trading right now. In fact, it's a good 64 pips. However, you can see the consolidation on the 4 hour yesterday. A lot of sideways movements, and that is reflected on price over here. So you can see it's really bottomed out at roughly around the 12.7684 mark. So we'd have to get a break below that, and then depending on how much price moves, we should be looking at this 12.7020 mark as our first initial target. So as it stands at the moment, we could see potential for upside. The longer price actually spends more time above the 23.6. So negativity still remains in play. There's not much news out this morning, but still waters run deep, as I always say. We had the French industrial production month-to-month figures, and a lot of news for the US market this afternoon. A lot of when I say a lot of news, not a lot of data news. I'm talking about FOMC meetings, and most importantly, there's the Fed. The Fed chairman, Bernanke, is also talking. So when he chats, there seems to be a lot of speculation that follows. So be aware of that. So as it stands about consolidation and a bearish trend, if you look at the price support and resistance level here, if it stays between this range and then moves to the downside, expect to see further sentiment to the downside. Just be aware of that weekly fib retracement area, which isn't too far from where we are right now. Let's go into sterling. Here we go. Sterling, exactly the same. Negativity yesterday, but we had already been trading into the 14.8500 mark. There was a likely for a bounce. We did see that the prior day, but yesterday's candle, bearish engulfing, moving it all back. But you can see on the Asian session, price reconfirming that support here at the zero line. There's a lot of, this is the last port of call for sterling. We get below this area here where it's trading at the 14.89 mark. We are looking at the abyss. The next level is the 2010 consolidation low here at the 14.4068 mark. But then the long-term support and resistance is this one right down here, which is my zero line, which is my monthly fib retracement, which goes back to 2008, 2009. So there's a lot of negativity. There's a huge drop between here. From where price is trading right now to that level, we're looking at a good 1,297 odd pips. So there's a massive abyss below this. So price is going to try and do all it can to stay above here. You can see the long-term sentiment very much negative, but the R-squared isn't there to actually really complement that negativity. We're seeing a lot of buying intraday, and that's the reason why, because we are hesitant, because we are trading above a major support and resistance level here at the 14.8250 mark. So as long as this zero line remains in play, there's more likely for a bounce to occur. RMO is very much below the zero line. However, MACD is spending a bit more time above this. You can see there's more red over here than there's, sorry, more green than red. And you can see on the 4 hour, very much swing lows in play. So we need to see the 4 hour break above the consolidation higher at the 14.95, the 14.90, 14.95.98 mark, and then we can target back up towards our weekly high here at about the 15.18 mark towards our 23.6, and ultimately to our monthly fib here, the price was last consolidated. So we would need to see a nice bullish engulfing move above here. If not, bearish engulfing break below 14.8250, would expect to see further negativity for the foreseeable future, and that would really be not really good news for sterling, because we are trading below a major monthly fib retracement level. So sterling looking negative but consolidative, as I say with the euro. Consolidation in a negative trend. Look for a break either higher or lower than this consolidation range here to see any further opportunities. US dollar Swiss franc, here again, US dollar candle yesterday was a bit aware of this 23.6, which is a monthly fib break, and now you can see the pullback. As long as price maintains above the 20.6, then ultimately we should be looking for higher highs. We had the same thing actually, a breakout, the pullback, but on each occasion we didn't get that follow through, and that's what I'm looking for now. So not trading US dollar Swiss franc at the moment, waiting for her to actually give me a confirmation that she's looking to go higher, and then she'll have all my attention. Everything's looking good long term, but you can see the negativity intraday with the R squared complementing that sentiment, and that's the reason why we're having the pullback on the 4-hour time frame. So if I go to on my 4 hours, you can see quite clearly after the breakout yesterday, price didn't really make any further moves. It's just been consolidative, and prices now pulled back on the Asian session. Swing highs has dictated upside movement. Swing high, swing high, swing high. There's breach over here, but we're still above the institution. Doesn't really count. Swing high, swing high, swing highs. And you can see that the RMO is very much ahead. I plotted the RSI here for one of our students yesterday. It is part of the actual template, but I just wanted to show them how to read it. Very much over the 70 mark, which tells us it's well overbought. But RSI, as long as it's trading above 50%, then we know we're very much in a positive trend. Okay, so RSI's main duty is to plot long-term sentiment or sentiment on price. As long as it maintains above 50, then it's positive. If it's below 50, then it's negative. Quite clearly, we're in an uptrend. RSI is above, and hence the reason why the RSI is giving us a true indication of upside. However, what we're trying to look for is if RSI is above the 70 mark, then we're looking at overbought, and we should expect consolidation or pullbacks, and that's exactly what we did. So we saw a breakout, then we saw the consolidation pullback, then we saw price making a higher high, which went into more of a overbought situation, and now we're having the consolidation. RSI is dipping now. As long as it maintains above 23.6, we're at the 97.087 mark. Expect to see further highs. We want to see a nice bullish engulfing candle on our 4 hour, particularly above this level. That would indicate to us that price is still wanting to go higher, and if we can get above a nice bullish engulfing candle, 4 hour candle close here, then for the foreseeable future the US dollar is looking long positive. Okay, so now we're in consolidation, so you should be waiting, being patient, waiting for consolidation around here. The longer price spends more time above 23.6, the more likely price is likely to head higher. So look for buying opportunities, bide your time, be patient, look for that confirmation candle, and then trade the outcome. Last pair of the day, the US dollar Japanese yen, same as the US franc, moving higher, however consolidative above the monthly fib here in the shape of the 50% retracement. Prior resistance here, and then slight support, then resistance again. Prices broke above here recently, pulled back, and then continued. However, not really taking the momentum any higher. RMO is above. The MACD is very much above, but you can see that we're not making any higher histograms. The long-term sentiment is very much positive. However, intraday looking negative, and the R squared is complementing that. Hence the reason why we've seen the last couple of days for the US dollar against the Japanese yen faltering at this level. So that would be our almost high. We would need to see price getting above that to be looking long term. So we move to our 4 hour time frame. Swing highs dictates upside movements. There we go. Swing high, swing high, swing high, breach, but it's still above the 50% retracement here, still above the institution, still above the 50 period moving average. This is still bullish consolidation that we're seeing. Okay, the moment she trades below the 50% fib, it gets below the institution, then we're looking at long-term negativity. At the moment now, she's positive. Okay, so look for consolidations, look for price to maintain above 50% retracement here, the 50 at 99.85 and change, and then look to see a price if the US dollar can rally and reattempt the prior highs made just recently last week at 101.498. So bullish consolidation on the US dollar Japanese yen for the foreseeable future. As long as she maintains above this 50% retracement level here, the monthly here in blue, then we should be looking for further opportunities for entries to the upside. Okay, Compliments with back the system up with some money management rules, guys. Follow the rules of the template if you are using the strategy. If you are interested in getting more information about how to get your hands on the strategy, please email us at info@sereneeducation.com. Okay, for further information. Other than that, keep it simple as I mentioned. Plot your major support and resistance levels. Be aware of those points, please, guys. We are trading at a lot of support and resistance levels, major support and resistance levels, especially on euro, sterling. We've broken Swiss franc highs. Now we need to see price maintaining above 22.6 on the US dollar Swiss franc now on our daily to give us confirmation that price is looking higher for the foreseeable future. And the yen, same thing. Trading above the 50% retracement is a good sign. Trading above the institution is a good sign. Now we just need to see price making higher highs in order for us to get back into it and look to trade to the upside. There's a lot of pips to be made. This particular one over here, get above the prior high on our 4 hour. We're looking at 218 pips to the next level. Get above that one. There's 398 in total to the next major support and resistance level high. So there's enough on the plate chart. Just got to be patient. Wait for the news to come out and to move price. And then when we get the confirmation on the candlestick confirmation, then look for your entry, stop, target. If that's all in your money management rules, then pull the trigger. Keep it very mechanical. Okay, have a fantastic day today and trade serenely.